Hello and welcome to Acumen Analysis, the show where we talk about economics, market conditions and politics and how that impacts you and your business. Right, so this is our first podcast.
It is indeed. Looking forward to it.
Yeah, and we've for anyone who can't see, we've got loads of cameras and lights facing.
Yes, I'm feeling the heat already of these lights.
And
admittedly, but still.
This is not our usual, the thing we do on a day-to-day. It's not.
Far from it. Territory, pushing myself out of comfort zone.
We're used to sort of typing away on a keyboard.
Absolutely.
Maybe having some Teams calls, lots of meetings for sure. And this is a complete new, but one of the reasons I wanted to do this was because I think there's a lot to be talking about at the moment. There's so much change for businesses, and lots of our clients are calling us up to talk about things that they might not have spoken to an accountant about.
But that change is probably coming from several different things. So business has been moving quicker. Technology, for one thing, the speed of transactions, the speed of decision making is so much quicker. I used to go into a shop when I was younger, and my parents would have to write a check. That took about a minute to pay. Now I walk up, put over my Apple Watch, and off it goes. It's done in milliseconds. So that's one thing. You've got political disturbance, for want of the better word, coming from all areas. So you've got the consequences of Brexit, which are still rippling through in one way or shape or form. You've got Trump looking to turn the world upside down. You've got the EU and the French political situation adding another interesting dynamic to our largest trading partner. And then on the other side, the third side to that triangle, we've gone back to having wars around the world, and fortunately not on our shores, but they're still within our sphere of viewpoint. So,
well, we're certainly being impacted by the wars. I mean,
absolutely.
At some point, oil prices, gas prices hits everyone.
Yes.
It doesn't matter where you are. And all of these things add up, don't they? Not to mention a lot of change politically in this country, for sure.
Yes, the to being able to go through prime ministers just by rolling the dice.
I mean, I can't remember how long did Liz Truss last?
Sort of something like 72 days.
I was about to say, is it like 2 weeks or something?
Yeah, not long. She's an example of someone who had an idea, and she may have been right, but she didn't want to bring the rest of the people of influence along her journey. So she announced it without having done any of the persuasion. So we're going to cut taxes to boost growth. So generally a good thing. But not going to explain how the rest of the country is going to be funded. And, you need to accept a second opinion. I mean, we have the OBR in this country, Office for Budget Responsibility. It's notoriously inaccurate in its assessment, but it is an independent third party that comes around and says, I think those numbers are right. People get assurance for that.
What's odd right now as well is that in some ways we're getting Labour doing the same, but in the opposite. I think you mentioned this to me the other day, actually, is that they're kind of deciding, okay, we're going to just tax everything more and more and more, but not really explain sort of where all the money is.
In a black hole sometimes with politics. I mean, you've got a Keynesian economic philosophy from, I think it was the 30s, where where there's a gap in demand, so economic demand, people want to buy things, gap in the economy from the private sector. The public sector can fill that gap to avoid recessions. And I think, well, broadly that's agreed, right? The public sector is notoriously inefficient in how it spends its money. So it's not the philosophy that's wrong, it's the implementation. And this is not about a Labour, a Conservative, or Reform, or Lib Dems, or even SNP. All governments are inefficient in their spending. So if they're trying to boost demand and create growth, it's far better doing it by being private sector led.
Yeah, and at the moment we're just making the government bigger, aren't we?
Well, that's what tax does. If you increase taxes, you make the state sector, the public sector, larger. If you reduce taxes, you make the public sector smaller, and by consequence, the private sector can fill that vacuum.
I don't think we've ever seen a government becoming bigger enable more growth overall. Really, it's about...
You don't tax your way to prosperity.
Well, yeah.
Yeah.
No, I agree with that, that's for sure. Okay, we've taken some data from ChatGPT, scoured the web for statistics about things like GDP, things like, cost of living, and various other things, and we're going to talk through those points. Stuart's got an interesting perspective on all of this because he wears quite a few hats. Not only is he a fully qualified accountant and tax advisor, he's also qualified IFA, qualified mortgage broker, and also qualified, probate as well. And way back when, he did an economics degree up in Edinburgh.
Yep.
So we're absolutely lucky to have him and to sort of dig into his perspective on things. So kicking things off with GDP and growth, I suppose, that's always a top priority for government. It's always something that businesses want to see, that being enabled.
Well, it's interesting because you don't need growth, right? But capitalism grinds to a halt. You can't help anybody without growth. So if we're living in a utopia, everyone's happy, everyone's well, there's no need for anything, nobody's demanding something they don't have, then you don't need growth.
Mm.
But that's not the real world. The real world says we all want more.
Mm.
So those that are unwell want to get better. Those that haven't got great education want better education. Those that have got jobs want better jobs. Those without work want to get into work. We're always wanting more. And that, if you want for greed, if you want to call it, is what drives capitalism. It forces people to say, I'm going to work that bit harder. I'm going to do this. I'm going to want to get more. And to get more, you've got to create more. That is growth.
Mm-hmm. Yeah. So, I mean, stats-wise, GDP is saying that we're growing just under 1%, or there or thereabouts over the last 3 years. Now at about 0.5%. So,
I mean, these are always surprising when you look at economic growth of a country and compare it to a small business. Small businesses' economic growth of 1%, it just wouldn't register anywhere for them, for that business owner. And, even 5% probably for a small business wouldn't be relevant, wouldn't be earth-shatteringly different. But for a country, 5% is quite big growth. If you look at China, which is growing rapidly over the last 3-4 decades, they're looking, yeah, exactly. They're looking at 5%.
Yeah.
So it's an interesting number. You don't get, capitalism seems to have failed when it aggregates all the businesses together up to a total of the total economy. The relative growth rate seems to have fallen, which can only mean that the bigger businesses aren't securing the same levels of growth, which is understandable because it's harder to grow by X% when you're that much bigger. But that's the challenge. 1% is derisory growth. It doesn't change anybody's life. If everybody in the country was 1% better, would you suddenly say, I am got to vote Labour for the rest of my life? The answer is the answer.
So, I mean, as an accountant, I don't think I ever learnt within my studies how growth really impacts me as an individual or a business, because GDP is really the output from the overall country, isn't it?
Yes, GDP is the size, the income size of the country. So essentially, you often talk about how much level of borrowing we've got. It's 100% of GDP or whatever percentage around that. But what you're really looking at is how much income do I have versus what is the size of my borrowing. So if you're getting a mortgage, you don't look at the value of your house. That's not relevant. You look at how much do I earn versus what is my borrowings for that house. And that relationship is what's driving the relationship is talking how much state borrow or government borrowing do we have, this 100% threshold they're talking about. And, it's unknown how far you can push that borrowing level. But
well, the US are giving it a good go, aren't they?
US, France, but Japan are the ones that are leading. Yeah. The question is, when you go to get a mortgage at your bank, you turn up at the mortgage provider's desk. Okay, I accept it's all done digitally nowadays, but let's just metaphorically talk about it. You turn up at the desk and you say, "I'd like to get a mortgage, please," and they fill it in, and you fill in your forms, and off you go. They provide the money.
Yeah.
When you get to a country doing it, there's no bank to turn up at. You don't turn up at the World Bank or the IMF and say, "Look, I want to borrow some money to fund state pensions or healthcare or whatever." You just don't do that. What happens is you issue bonds. And it depends on who wants to buy them. So if the person buying them is looking to make an economic return, they put their own hard-earned money into buying that bond, they want to get an economic return.
Yeah.
And that return is defined in two areas, risk and reward. And the more risky you're perceived to be, the greater the reward. I mean, would you be buying Ukrainian bonds at the moment? And Ukrainian bonds, perfectly valid. I'm sure they're legal tender currently. But there's the question. Depending on the outcome of that war, might depend whether you get paid back. That's a big risk. So you would demand a huge return for that.
Yeah, true.
Likewise, if you're in America, although they're talking about it, you're the biggest economy of the world, you'd be fairly safe.
Yeah. But if bringing it back to business owners, say for example, GDP growth went up to say 10%, which for the UK right now would be vastly better than what they've had in recent years. What would the common man on the street, what would the business owner see?
Let's go back. Yeah, right. So GDP is measured as a total sum, but it's irrelevant to the man on the street. What they're interested in, if you want to look at in economic statistics, is what's the average income, the average GDP or the GDP per person. So GDP per capita. That is the figure that's critical. And then you compare that with other countries of the world and you'll see your relative wealth. So it's not the size of your country. If you had 1 billion people and each person earned £1 a day, you'd have a certain size of economy. But if you had one person who earned 1 billion a day, that person is much better off, even if the country's the same size.
So overall GDP is really helpful for banks and
it's the big picture stuff.
And government borrowing and all that stuff, it all impacts whether they can afford it and things like that. But actually GDP per capita is
the key measure. You will feel better if your GDP per capita is better. It's why the question of immigration has become so important to this country.
So it's going to impact things like cost of living?
Absolutely. So if your economy grows by 1%, and then you allow immigration of, and I think this is probably, it's not as bad as, let's say 2%, or just for argument's sake, you will be worse off as an individual because you've got the top line has gone from say 100 to 101, and the bottom line has gone from 100 to 102. So you are worse off.
That's interesting.
Now, is that significant? Is that something that should be done? Well, that's a social question for society. But if we're looking purely on economic terms, then if you increase the number of people in the country by other means, immigration, birth, whatever, doesn't matter, then you are needing to grow to accommodate that. Now, obviously, there's sad things like death that reduce numbers, and that has the opposite effect. But 1% growth at the top line is not good. So if you don't look after the bottom line in that denominator equation, the number of people, then you're not going to feel it. You're going to feel worse off.
So bearing all that in mind, I mean, what does good look like in terms of GDP growth? I know you said in utopia you don't need it, but we don't live in utopia.
We don't live in utopia.
So there must be like a percentage of growth year on year that a Western government like the UK is saying, we really need to hit X, and that looks...
Well, I think we should be aiming for 5%, but expecting that we'll fall short. But there should be putting in place 5% would be very good growth. We would be starting to become a wealthy country again if we could consistently deliver 5%. That is quite an achievement, though. I mean, I think at the moment I'd be happy with 3 or 4. But you've got to aim, and China was over 5% for many years.
So setting a target of 5%, but falling short. And obviously we've got data here on what other countries like the Eurozone as a bloc, what Germany and various other countries are doing. And what's really interesting to see is Eurozone bloc, generally we're doing better than that. That's quite interesting.
I think the Eurozone suffers. It's a lovely concept, but where you want to be a law of averages, where you take from the ones that are growing more, the wealthier countries, and give it to the ones that are poorer, then you're losing the incentive to grow because you've got that handout that's come. So it's a hard one, I think, for the EU to hit the top level of growth of the world economies. Doesn't mean it can't grow, and it can't grow better than the UK, but it's always going to struggle while it wants to promote that social equality as one of its top agendas.
And I think that's right. I mean, we've got such a hugely different demographic of countries, not just politically, not just economically, religious factors,
Complicated.
everything. And so what's right for one country isn't always necessarily right for another country. And there's been a lot of,
It's a law of averages.
yeah, it's a law of averages for certain. But when it comes down to voting for specific things, you often get, one country getting in the way, or a few countries getting in the way of making
Hungary in recent years.
yeah, well, but also France for things around farming, because it's so important to them. Being a blocker for
It stagnates growth, puts a barrier in growth. If you want to take the farming example, and I don't know enough data, but if some part of the EU says we've got to do this to reform farming, to grow farming, well, let's assume they're right. If another country vetoes that because of their self-interest, possibly quite rightly, because they've got their own economic factors to think about, then you've lost that opportunity of growth. And that's the challenge that the EU has. Every country has that challenge. Every country, if you look at the UK, there's a huge difference between the north and the south. They've got this called the north-south divide. Every country has got their challenges. And how you navigate that is important. The EU has probably got more of those because it's got not just in country, it's got a number of different countries, languages, culture, history, everything.
And I mean, what's particularly interesting is that Germany, obviously one of the bigger economies in the Eurozone,
Biggest, yeah,
is probably doing, they're doing considerably worse than we are at the moment. At the moment we've got, I think it's negative 0.4%.
Look, I think we're quoting statistics, okay, and we all do it, and we'll all quote them to serve our purpose. But there are statistics which aren't quite telling the truth. You need to look at the trend. What a negative or a reduction in economic growth for one quarter is exactly that, one quarter. Are we now seeing in Germany's long-term decline and its economy is going to shrink forevermore? I don't think that's the case. Germany is a robust economy going through some current challenges, which I'm sure the government there will correct and sort and rectify. And that's what our government needs to do. Where there is bad data, it needs to put in place measures to correct that so that the people feel, if it's economics, better off. And it needs to be long-term better off. And the problem with democracies is you've got a government for a certain number of years, a short time, to affect that change.
No, it's definitely interesting, and I think what we should probably bring it back to as well is, based on the current statistics. Although, like you said, there's well, in some ways, there's damned lies in statistics. You've said that to me before.
Yeah, I think.
Sorry,
I think it was just Rayleigh who said that statement.
So we got to take all of this with a pinch of salt, because there's like thousands of factors to consider, probably millions of factors actually, but just on the GDP growth alone, how's the government doing? Current government, UK.
Well, I don't want to quote a single number because it's a fact. Okay, admittedly, the ONS often revise that fact, but it's a fact as to what it's done. I want to look at the long-term trend. Have we got in place growth-based policies? And I don't think we do at the moment. We've come out a challenging period, admittedly. Our borrowing's very high, so we've got less wriggle room to invest. And, the Chancellor's got a budget to give next week. And I think it's a really difficult job for her. I think she's got a really difficult job. But the bottom line is we have to do the right policies to stimulate growth. At the moment, we're seeing a budget deficit, and that's taking priority over growth, despite the rhetoric. The rumours are that the deficit's the priority. And if you take away from the people, doesn't matter how you do it, but if you take away from someone, they can't grow in the same way. They haven't got the working capital to afford to invest and get paid later. They haven't even got the money to do the investment. So it's very hard to grow an economy by increasing tax. So I think that we're going to rely on better state expenditure. And in the UK, governments of all persuasions, this isn't just trying to hit the current government, are not very good at efficient expenditure. We look at HS2. What have we got out of that?
Absolutely nothing.
Absolutely nothing. I think if you look at the London sewer, mind you, we actually managed to achieve a much better job. And it was delivered in a different way. And there's some lessons for government in that. But the bottom line is, if we're going to tax the economy more, then we have to sit there and say, we are not going to hit the growth rates that we want to hit.
Yeah.
That's the bottom line.
So let's move from GDP to inflation, cost of living. So we had an all-time peak literally last year, up at 11%, I think, and at the moment we're kind of running at about 3.8. Stripping it all back, if we could get an explanation for people who might not have an economics degree to lean on, the common man, sole traders perhaps, who want to understand how inflation's impacting them.
Well, it's about really the value of money.
Yeah.
Okay. So I used to, like, as a kid, buying polos. And a box of polos or a packet of polos was about this long. Now, if I buy them, they're about this long. And I've lost for the same 10p pack or whatever it was at the time, it's that. So I'm getting less. As it happens, I'm paying more for less.
Yeah.
That is inflation.
Your pound today is worth more
Yep.
than a pound tomorrow.
Your house that if you're lucky enough to own a house and it's worth, let's arguably say £1,000, you want it to grow in value. But it's the same house that somebody buys when you decide to sell. So what you're getting for that growth is inflation. You haven't done anything. You haven't improved the value. While if you take some chemicals, mix them together and heat them up, stretch them, add other compounds, colour it, and you get a product, then you've created value. That's not inflation. That's economic value creation. And it's very different. So that goes on to GDP while your inflation is adjusted out of it.
Yeah. So things are costing more year on year. Essentially, you can't get as much for your pound. 3.8%, 11% a year ago. What does good look like from an inflation perspective?
Well, you
Should we
can't
always
if you
expect it?
don't. Well, there's a view. Some people have said that you don't want any inflation. That's not good either. You need to have some inflation, even though it does erode the value of the pound in your pocket. And you need growth of an economy to get that value back. But you need, otherwise everything stays still. People don't change jobs because they're getting the same pay everywhere else. They stay the same place. You get a rigidity. Things don't change. And you need change in order to create growth. So you don't want an economy that is constantly zero growth. You need to manage it. You don't want negative because that's disaster. People better keeping the money in their pocket and never spending because it goes up in value.
Yeah.
So you need to, you want somewhere between sort of 0 and 2.5, something like that. I think the government's target is 2.5%.
Okay.
I think the Eurozone's 2%. That's sort of region 2.5.
And I suppose some things that would be helpful for people who are trying to assess, if decisions that are being made are good or bad, it'd be good to know what impacts inflation. How, what government decisions forces inflation to go to an all-time high. And
inflation is driven by the fact people will pay more for the same thing. I'll pay more for that house today than I would yesterday, even though it's the same house. So again, aggregating it back to an economic theory, it's when demand exceeds supply. There are more people wanting those goods, more money chasing after those goods than is available to be delivered. So if you increase your output, your domestic output, produce more, etc., build more houses, then you reduce inflation.
Mm-hmm.
So if I could choose to buy the brand new house that's been built in the street instead of this other one, I would do so. That means now there's one person that doesn't need to buy that house for 100,000 plus the inflation, and therefore it may go back to the 100,000.
So that you're talking about inflation in a specific sector right there.
Well, it's just housing as an example. People
Mm,
tend to buy a house and expect it's going to increase in value. That's not necessarily the case.
mm.
I mean, but it's been the case in the UK because we've a rising population and we're chronically poor at building new houses. So the housing stock, as I think they officially call it, but the number of homes in the house, in the country, are not going up by the number of people who are wanting homes in
Yeah.
the country. So that's putting the prices up. Will that continue? Who knows? But that's the question about housing growth, housing price growth. If it continues, then you'll have housing price growth.
Yeah, I suppose when we had it up at 11%, that was particularly painful.
I think, again, you've got to look, yeah, it's undoubtedly painful for people. But again, if you're trying to assess how a government's doing, there are one-off things that affect it. And if those one-offs are transitory, they're not going to continue long-term, they're not going to embed themselves into inflation every year, then to some extent, it doesn't matter. The world adjusts. And yes, there's been pain in that adjustment. And I'm not trying to say it's easy for people, but once you've made the adjustment, it's okay. It's not 11% forevermore. So we had a spike because of energy prices. There was some tax changes. All the interest rates went. All those things affected the inflation. And you put all that mixed together, and people feel worse off because of they've got less discretionary expenditure. People want discretionary expenditure, whether that's to buy cigarettes, go to the cinema, buy a new pair of shoes, go walking in the rain, whatever it is. People want discretion. And the more you tax, the more you suck out the economy by things they have to have, whether that's, private medical insurance, whether that's
Yeah.
school fees, whatever it is, the more you suck out to that ends up being non-discretionary. School fees would probably be semi-discretionary in the UK, but the point being the same. It's the more we all want discretionary spend. We feel better if we can choose to do something or not.
Yeah, and happier, and like we can afford the luxuries of life, basically.
Yeah, whatever our definition of luxury is.
Yeah. So I had this thing that the government changes the basket of goods regularly or
Look, I don't
irregularly.
think that's right. There's an independent body called the Office for National Statistics, the ONS. They change it. They do. It's amazing how our world view is based on surveys. So they do a survey of what people bought, right, of the goods they bought, the basket of goods, and they change that, what's called the basket of goods, that goes into the definitions around GDP and inflation and etc. I've yet to know anyone who's ever been asked. Now, again, I'm sure we've got a population of almost 70 million in this country. I don't know. Certainly haven't met anywhere near half, but I'd have thought I might have met somebody who's had to fill in that form.
I've never filled it, and I don't know anyone who has filled it. And what I think is really interesting is if the Office of National Statistics went and asked someone who lived up in Newcastle, for example, or Scotland maybe, what their basket of goods look like compared to someone down in Mayfair, I think that they would be worlds apart, and so far apart that, how can you get good, reliable information coming through on that? But I don't know who's been ever interviewed, so I don't know if they're doing this stark.
Yeah, I mean, it's an interesting question, but look,
or if they're asking the same people each year.
Well, it might be. I mean, I think that the key point is it's an independent body, the ONS. They are supposed experts in doing this data. No one has turned around and said it's overly flawed. People tend to accept the data they produce, even though I do worry about whether surveys are the best way. But in the absence of a better way, it's not a bad way. So I don't think you can see the government change the basket because I think that's misleading. The government have to accept the data that is produced by the ONS. The ONS do sometimes revise that data when they get further information. So they do go back and say, sorry, we were wrong about a previous month. But generally, that's your best indicator. It's independently produced.
Yes. See, in a world where you've got so much data, I just don't understand why. And maybe they are doing this now. Maybe it's not survey-based. I don't know. I mean, why can't we just dig into Tesco's database and say you now have to share that information, and we get inflation across all goods.
I mean, it's a very interesting point. It's a very good point. It's a whole podcast on its own. That you have privacy laws. You're going to have market manipulation concerns. You know, Tesco's is a publicly traded entity. So if you happen to know, Edmund, you're going into, as part of the ONS, you're going to extract that data. Do you have market sensitive information around their sales where you can secretly trade and make money? Well, you'd have that data. However, in saying that, there is a move coming into the UK. They put in the primary legislation, they haven't done the secondary yet, about electronic invoicing. And broadly speaking, and there's different mechanisms, I'm not quite sure which way the UK is going to go, but really you won't be able to enforce your invoice in court unless it's an electronic invoice. And the government someone's got to approve that invoice. Now, I don't think you're going to have a team of people in an office going, yep, approve that, rubber stamp, and off we go. I think those days have gone. So you can look at the old movies. I don't think that's the way. It will be done digitally. And really what it's not designed to hamper business. It's designed to give greater data to the public sector, to the private, to catch fraud, particularly on VAT. So that's the process. Other countries, I think there's a lot of countries far more advanced than we are in doing it. It is coming in, and it will be a massive change. But if we then look and say, well, what's the invoice got to be? Is it the invoice? I think there's different if you turn up physically at the goods. I don't think you get something. But if you go to Tesco's, is it going to say, look, I bought 2 loaves of bread and a slice of meat? Or is it going to say your total bill was £7? You could just go into more granular detail, and then you've got the basket of goods.
Yeah, that's a good point. That's a good point. I mean, that's definitely, like you say, a whole nother podcast.
Privacy is it's an interesting question. It challenges where as a society we're able to go efficiently.
Yeah.
With information, you can make good decisions. Without it, you're taking punts. To get good information means you have to get it from individuals.
So before we move on to the next point, which is cost of borrowing and debt, are we happy with 3.8% at the moment inflation? Is that something that...
Too high.
Still?
It's too high. And it's high because people are struggling at the moment. And therefore they're demanding more. So that's the cost of living issue. And then we've had a government that's decided to increase minimum wage by, quite frankly, for the under 21s by an astronomical number, in the teens, I think, or maybe even higher. But it was a big number. And the problem with that is if you increase the wage at the bottom up to the next tier says, oh, I should be earning more. So it cascades all the way up the economy. And so it's not so much about the social value of it, it's the inflationary impact. So you end up with more money chasing the same number of goods. That's inflation.
We're saying essentially is a minimum wage increase for the sort of lowest paid jobs, and the ERS and I increase.
Part of national insurance.
In particular, the biggest sort of overall percentage increase was on those sort of jobs, relatively. That's all essentially hitting inflation numbers, increasing the cost of goods to everyone. So everyone's essentially paying for that increase.
Well, there's two ways of looking at that. Either it depends whether you're a supplier or demand led as an economy, and that's always debatable. But you either say, look, it's gone into the cost of producing something because I've got to pay more in labour costs now because of the tax changes, or you say we have paid people more, therefore they have more money, therefore they're using that greater amount of nominal money to buy the same number of goods. So they're just spending more on the same things. That's both ways you end up with inflation. Depends which way you view an economy as to how that's produced.
When actually, if you've got more money, you tend to spend more as well. So yeah. Well, next point is cost of borrowing and debts. So we're looking at interest rates, and let's maybe talk about some of the businesses who are coming to us for advice as accountants.
Yeah.
Are they able to get their debt?
Well, I think the banks have got themselves in a position where in the UK, the banks are really only interested in very secure lending.
Mm.
So have you got security? Security, primary number one, property. Have you got UK, for a UK lender with UK property that they can take a charge on a mortgage on? I would say that you're then looking at receivables, stock, and you might get a little bit of plant and machinery options as well. Beyond that, our banks are pretty poor at lending. You can have a long, stable business, let's say it's a funeral parlor. People are bound to die, assured to die some point. So there's a stable business model. So you think, yeah, that's really, we can borrow against that. So you walk into your local high street bank and they'll say, what's your security? Do you own the properties you operate out of? They know we rent them. And the loan is going to be turned down or you'll get a derisory amount of money. And I'm afraid that's the world. We haven't created a lending platform to take risks. A regulator has driven the banks to not take risks, and understandably in some respects, because it's depositors' money. But we're in those restrictions. I think Labour are trying to lift some of those restrictions to boost borrowing. We'll see where we end up with that, but that's what we're trying to do. So what's happened is you've got this void where people are wanting money.
Mm.
So what you've got is private credit, professionally run funds coming in to fill that void. And I think that's probably a good thing. You're filling voids of demand and filling that demand, but it's got its weaknesses. Those private credit funds have come out of private equity.
Mm.
Private equity is used to much higher returns. So what's happened is where they used to invest in shares to get value growth, now they're really just investing to get interest return, which is normally lower. So they've got this philosophy of wanting more.
Yeah, and it's actually the huge increase of second-tier lending that's caused the government to say, actually, maybe we do need to relax the rules on banks because, it's disproportionate how many people are going this way to get second-tier lending to how many we would prefer to see getting it from the high street banks and getting a more
Absolutely.
cost-effective debt.
I mean, don't get me wrong. Private credit provides you borrow at higher rates, but maybe the business demands that. I think what we need is a plethora of options around to cover the whole spectrum of possibilities. And at the moment, we don't have that, and I think that's holding us back. We run out of risk capital in this country, something that the America seems to have in spades, and it's one of the reasons why they can continue to invent and revigorate their economy. Is that availability of risk capital?
And I suppose in terms of interest rates, I mean, in 2023, I think we had the highest cost of borrowing since the 2008 banking crisis.
It's higher now, I think,
And it's
as a country. Yeah, look, we've got, again, it goes back what I said earlier in the podcast. It's about how the government raises its money. That's government money is considered risk-free. It's not technically risk-free. It's closest you can get to risk-free, but it's not risk-free, and different countries have different levels of that risk. But you price off that. The private sector, so the banks, the second-tier lenders, are looking at what governments can borrow at, and then decide how much extra risk does that customer they're going to lend to need. So you start off with the what's called the gilt rate, which is the government's borrowing rate or state's borrowing rate. You then go to SONIA, which is the new version of LIBOR, which is the interbank rate.
Yeah.
So that's what banks lend to each other. And then you get the rate for the Pacific borrower, covering their risk. So all three are relevant.
Yeah.
You tend to find the interbank rate is a relatively stable figure within margins over the gilt rate. Yes, it will take the quality of the bank, but it's interbank, it's banking market. So it's not really going to move in the same way over the gilt rate. But if the cost of money has gone up because the government's cost of gilts have gone up, or interest rate on gilt, then the SONIA rate will go up. And then that will get passed straight directly onto the private sector borrowers.
And it'd be interesting to kind of talk about, I suppose, the impact on GDP growth with regards to access to capital, whether that's debt or equity?
Well, capital's needed to grow. There is no doubt you need capital to grow, and borrowing,
The country and a business.
and the country and as a business. And borrowing is a very good way to get access to that capital. But in terms of what it gives you cash. It doesn't give you growth. If I'm a small business and I borrow £100, what have I got? I've got cash of £100. I've got a loan of £100. I'm not any better off.
Yeah.
It's what I do with that £100 that creates the value.
Yeah, if you turn it into £200.
If I turn it into £200, I've still got to pay back my 100. I've made 100. I've doubled my money.
Yeah.
It's a good return. So you need to have the money to be able to take advantage of the opportunities.
And this is some of what the government's trying to balance right now from their perspective. It's very often about where do we invest to, better make the country better.
Yeah, I mean, there's always winners and losers in this, but that's exactly right. It's what's the balance of the economy needs to be. I mean, the UK is very much London-centric.
Yeah.
I think to its detriment. Germany, for example, and America is much better at spreading their wealth around a much wider part of the economy.
Mm.
That's a generational issue. I mean, the reason London's predominant is hundreds of years in the making.
Yeah, no,
It's not an easy fix.
Yeah, yeah. And with regards to businesses, obviously, we've got lots of clients who, in some cases, they don't have loads of assets. They're a service-led business, and their access to capital is pretty slim. Or if they want it, they have to sometimes go.
Yeah, so if you were a service
second tier.
business and you're saying, how do I grow? Well, what are you trying to invest in? Well, if your customers always take you 3 months to pay and you get new customers, you don't get paid. So you're doing the work. You raise your invoice and you don't get paid for 3 months. So how do you afford to get that work done? Who are you paying? And do you not pay your staff? No, of course you pay your staff. So you're cash flowing that gap until the money arises. So money could be useful to cover that. You've got people want to buy new computers, new machinery, new offices, fitting out. All those things need money, need capital that are abnormal expenditures. And then you've got, of course, acquisitions. People want to buy their competitor. That all costs money.
So what do we think the government's, the objective assessment we're looking at, are they doing a good job at making sure businesses have access to the capital that they need? Are they doing a good job at making sure debt is effectively priced or priced fairly?
Well, I don't think it's the government's job to price debt. So the fact that we've got private credit has filled the vacuum, I think we should be applauding private credit for filling the vacuum. What we need to do is to create competition in that market, so it's not just the private credit space.
Mm-hmm.
And I think we should be trying to encourage the mainstream banks to deploy some of their capital into those rates. That space, I should say. That would give them a slightly higher return. Yes, with risk. So you're going to need some regulatory sort of adjustments around that. And I think they could do that without costing the government money.
So you say it's not the government's job to price debt or
turn around and put in minimum rates or maximum rates. It should be saying, we need to encourage competition.
Yeah.
And at the moment, the high street banks, who are the big boys in this game, right? Let's be absolutely clear. They have more money than any of the private credit funds, to deploy it.
But the bank does control the regulation, like we've said.
The government controls.
The government controls the regulation on the bank, which at the moment is hindering banks to kind of release.
Well, they've done some initiatives to try and free that up, and we can talk about that in a future podcast. But we'll see. Time will tell. It takes a little bit of time to see how it goes into the system. My own views, I don't think they've done enough, but you need to try and encourage that. The other thing to try and look at is we've got this movement towards disintermediation of the banks. So removal of the banks from financial transactions. And, you're looking at your cryptocurrency type ones of your tokenization, where people can buy and sell goods without having a bank in the middle. And, while there's no doubt there's risks around it, it's an interesting concept. And you start to wonder, is there a way where we can create a sort of a lending platform that cuts out the banks, cuts out private credit, and prices risk truly. Now there is a concept in Denmark, I think it's fan brief it's called, where mortgages are effectively on an exchange. So it's a concept to securitize, like securitization. The difference security, you've got a huge bundle of mortgages. Barclays Bank will have 1,000,000 mortgages, packages them all together and sells them into pension funds in sort of the bond market. So that's securitization. The fan brief is working in much smaller ticket sizes. And the question is whether we could replicate that, because most of the time the size of a million mortgages getting securitized is beyond the small business borrowing. Doesn't need that much money. In fact, couldn't afford it. So you're looking at what could you do at a smaller scale? And the disintermediation of the banks is a concept which I think could evolve into that. But it would be good. It would need some thought leadership. And that thought leadership will probably come from the private sector. And I just hope the government will be open to listening as to how that might need legislation to support it.
Well, they're talking about it, so fingers crossed. And I suppose moving on to the next one, though, employment and unemployment. We've had an awful lot of change with regards to minimum wage. We've already spoken about that. I think there's been an increase in unemployment, as maybe it's affected by that, maybe it's affected by other factors. But in general, we want to see people in jobs, don't we?
Yes. I mean, employment, people want things to do, right? And I think it's a thing of humanity. Twiddling your thumbs is not an ideal scenario for anyone. So, we don't like being in hospital, and that's normally when we end up twiddling our thumbs because we can't do. So we want to do things. Doing something that gives you economic productivity is probably great for everyone. So I think people like to have jobs. What it pays, that's a personal question. Some people's job is looking after a house and looking after family. Fine, they're busy, they're doing it. They get social value and reward from that. Others go to what we call employment opportunities where they earn money. I think there's a difference between those who are unemployed and those that are working. And I use the word working because if you're a housewife and not looking for work, then you're not unemployed. You're gainfully active, just not in a paying job. You're doing a valuable job.
Yeah.
So I think that there's unemployed, which is the people that want work and can't get it.
And I mean, what's interesting is that I think the trend is actually going up. So unemployment is, so only by a small amount at this point, but as you've said earlier, any change takes a while to implement. And the minimum wage thing came in, and the ERS&I increase.
And Tesco's, you're running a very big business. You pay an awful lot of people in the tills and the warehouses, and you're not paying them huge sums. You're not paying them bankers' salaries, right?
Yeah.
So minimum wage has an impact to that business. So how does Tesco respond? Probably recruits less people. It probably says to people, we need to work a bit harder. We need a bit more. You're going to have to work harder because we're not paying you more.
Let's invest in those electronic tills that we were umming and ahhing about.
Yes, so you're going to see much more economic tills. So much more automation. And yes, look, that is economic progress. Okay, you have to be clear. It's an advancement and it's cutting cost out the system. The downside is jobs lost. Let's be absolutely clear.
Yeah.
If you raise the cost to an employer, the reality is the employer will react in the best way they can. And Tesco's, with largely unlimited amount of money, will seek solutions that it's probably been developing in the pipeline or just advance them.
I mean, I went to an Asda literally last week, and I was surprised to see about 2/3 of the tills, and this was one of the big Asdas, it was a massive one. About 2/3 of the space for tills was taken up by the electronic tills, and they were obviously double banked. So they must have had, 4 or 5 times more electric tills than they did manual ones. And even on the manual ones, they only had 2 people on them.
Well, again, these businesses have worked out there's an increased theft risk.
Yeah.
Whether it's accidental or purposeful theft risk from self-serving tills, but they price that in.
Yeah. Well, is it cheaper to to no longer have those salaries and have a little bit more theft risk, or vice versa?
But, when you buy Tesco's, you've got a shelf life for the products. They're perishable goods. So all that happens is some of the stock that you would be throwing away is reduced. So The question is whether that person who's stolen that lettuce would have paid for it or not. Probably not the lettuce is being stolen.
I think of all the things people are stealing, lettuce isn't high on the agenda. I've seen security tags on steaks. I've seen security tags on high value alcohol goods, but lettuce is yet to be security tagged, I think.
Yeah, okay. Point taken.
But high employment is good for the economy as well, because it's more people putting in to the system.
Yes, it depends. Again, you look at what does it do to Tesco? Tesco's now making more money because it's not paying people. So what does it do with it? If it goes and pays dividends to investors overseas, we've lost that value.
Yeah.
If it pays dividends to UK pension funds that then are getting paid out to the UK population when they retire, then we haven't lost anything. So it's not necessarily bad from an economic perspective. It's terrible for the communities involved that they'll have them and their mates are being made unemployed, and that's not nice, or reduced hours. So used to work 40 hours a week, now they're on 20.
On the flip side, if you're employed and you're putting in, that's good for all of us, because possibly less pressure on tax, but then also it means even more so if you're not then claiming benefits, perhaps. So there's a double-edged sword on.
But again, we go back to the data's misleading. So if Tesco's keep on the same number of workers, but because they've automated it, rather than having 40-week shifts, they do 20 hours a week, they're still employed. So it doesn't go into that unemployed statistic. But those workers are earning half what they used to earn. They're suffering.
And we've talked before about people being on a 0 hours contract and barely getting any work at all, but technically being employed, which again...
0 hours is not a problem. 0 hours contract is not a problem. The question is, does it work for the employee who wants a certain number of hours to live? Whether that's the flexibility or whether that's a certain commitment. It's that issue. The flexibility might suit all parties, but it's only a problem if it doesn't suit the employee and he's forced to take that as the only job. And then you have the social questions of whether that's an employer problem or an employee problem.
So just looking at the next point that ChatGPT has given us to have a think about.
Okay.
It's quality of life and well-being. And it's saying that largely there's been no improvement. Do
you feel better off?
Probably not. What from say 2 years ago to now. I'm about to stop my building my house, so I'll be glad when that's finished. A bit less money going.
You managed to afford that. I would imply that you're probably better off.
Yeah, I suppose so. But 2 years ago, I was sort of, maybe.
So, I think that's probably an interesting point. You've managed to get this new house, but you're not doing anything outside that's driving your perception of being better off. I suppose you're not buying new cars, you're not going on fancier holidays, you're not going out for meals more often, you're not buying more luxurious goods, and I think that, you've ploughed that discretionary spend into the house.
Yeah.
But I think you're right. The general population is people don't feel better.
Bad example, I think.
You probably are. You're young and growing a career.
Yeah. Where not everyone is growing their career necessarily, and many people will be largely on the same job for many years, and the data suggests that people are not feeling better off. Obviously, inflation was high 2 years ago. We've already spoken about that. Inflation still remains at 3.8. That just means that people are probably pushing for higher salaries with their employers or thinking about moving jobs sometimes.
Yeah, I think it's a hard discussion to have around, are people better off? It's a subjective judgment. You feel fine, and then your next door neighbor buys a new car. How do you feel now? Well, they've got a new car. Can we get a new car? No, we can't afford one. So you feel worse off. Well, before they drove into the driveway with a new car, you thought you were doing fine. Yeah, so it's a very difficult one to judge as an individual. I want to go on holiday to Spain every year, and suddenly the Spanish holidays are more expensive. So it's a thing to do with maybe the Spanish taxis or the flights or something that you're not any worse off. can't do what you previously used to do, so you feel worse off. You have to change your habits.
Yes, you're saying it's much more impacted, or at least an individual's perception is more impacted by a whole number of things, but the facts of the matter might not be
Well, if you
the
bought a
same
woolly
as the
jumper,
perception.
if you had a woolly jumper, then you put the heating down, you'd feel better off because you've now got a woolly jumper, you don't need heating on as much. Now you're better off.
Mm.
But actually, you've got the same amount of money, you've just chosen to deploy it differently.
Yeah.
And I think, as in a country, again, it all goes back down to GDP per capita. So that's the sort of the national average. There'll be a wide range from the rich to the poor, but that's how you would measure, are you better off?
So ChatGPT's pushing us to talk about quality of life, how people are feeling. I think, how well the NHS is performing in dealing with our health matters, waiting lists, all very topical, all very emotive. Is the government making sure that the NHS is well funded, do we think, and not inefficient like it might have been in the past?
Yeah, I mean, a lot of how we feel is about our health. How we're feeling about life is driven by our health. If we're not feeling well, we tend to be down. So it's a really important aspect of welfare. And the NHS, is a great institution, but it has its challenges. It's traditionally been very good at treating ill health.
Mm.
It's not so good at mental health. It's not so good at public health. So it's not really a health service as opposed to it's a sickness service. But people are grateful for it. But it gets a lot of criticism, and some of that's merited. But it's changed. It's got a huge amount of data. I think there's a huge amounts of opportunity advancement in technology in healthcare. We saw with COVID that there was a vaccine that was developed. I think it was over a weekend after China released the makeup of the virus. So the society is well advanced in healthcare, but we're still struggling with it, and we're struggling with really two things. We are becoming unhealthy as a society. That's just general prosperity of humanity. So it's not down to just the UK. We eat more unhealthy foods. We sit at desk jobs. We're not running around throwing spears anymore. So we're more desk job based.
You're not throwing spears in your office?
Only at you. Yeah, so we've got those challenges in humanity, and we're getting fatter. And what you see on the outside, and what you see on the outside is on the inside. So we are less healthy. So we're putting greater demand on our NHS and our health services at a time where the NHS, quite frankly, is struggling financially. So there's a much more increase of demand. And, we should be grateful we've got cover. We've got some sort of healthcare. But we've moved away from a sort of an accident and emergency type healthcare system, which to me is the essential bit you need, to the optional treatments to get better.
I mean, not just NHS, but local government generally is having its challenges quite significantly at the moment.
Yeah, I look back and they since 2008, I think local authority have been squeezed every year. They're losing huge portions of the money. They've got very limited discretionary spend now, and they've got real challenges. You can just see that in England, the number of councils that are in financial matters, special matters. It's a highlight of a system gone wrong. It's not an isolated case of bad spending, bad leadership in the council. It's widespread. And, undoubtedly managed to cope for 16 years, 17 years with a reduction in money. So I would assume that there was a lot of fat 16, 17 years ago. But I don't think once you turn the tap off, there's no benefit of carrying on turning it. And I think that's what we're trying to do, keep turning it and getting something out of it. And there's nothing left. I think, if anything, we've got to put some money into our local services and not take away.
Yeah. I mean, I think there's an awful lot of money being spent on consulting firms coming into local government and NHS alike.
I think the austerity that the local authorities are suffering means we need some bigger thinking. We need people to kind of work out how to do something better. And there's a role for consultants in that. But it's not about the assurance level. It's about doing things differently. And we see it with the NHS. Sadly, with my wife's health, I'm in the NHS a reasonable amount of time. And it staggers me that A&E on a Saturday night has a massive amount of nurses walking around the computer screen, doing nothing. And I'm sure they're working. I'm not trying to say they're not hard working, but it doesn't seem to be where I would expect them to be.
Mm.
They're not treating the patients. They're not out there caring for people. And I'm not sure that's why they would have gone into the caring profession, to stand around a computer screen. And yes, data needs to be entered, but it's one computer with 10 people around it. It doesn't seem to be they're all entering it. So I think there needs to be a thought process around the pathway into healthcare and how we can automate more, how we can enable things. So if those nurses, for example, all were given tablet devices or iPad type things, they could be walking around with the patients and entering the data as they go.
Mm-hmm.
They wouldn't need to go back to a computer screen to type things up. Would that be quicker? Would that be more efficient? My sense is I think there is certain merit in that.
And I suppose one of the things that I can remember that Labour have done since they've come into power is they approved a big amount of local authority salary increases, and doctors and nurses have had a bump.
Yeah.
I think they've recently asked for another one. I don't know if that means that because they're more well paid, maybe they're happier in their job and they're working harder, and who knows, or are we not seeing any benefit from
Well,
that?
it's interesting. So you've got a country which, according to the press, is financially running a deficit. And I think that's fairly agreed, not just by the press, the ONS and everyone. So the question is, at a time when you are not able to make ends meet, and that's to be absolutely clear. If you were at home and you were doing what the government's doing, you can't make ends meet. Now, Conservative had the same issue, so it's not a Labour issue. That's just what we're saying. What would you do? You wouldn't make it worse without getting something back in. So yes, you might invest in something in order to get an economic return for it. So raising public sector salaries for no output benefit does not improve your position. It makes it worse. Is it the right thing to do? Very possibly. Is it affordable? No. And that's the problem. So I think the unions are managing to drive an agenda into this Labour Party to suit themselves, which, from the union perspective, that's exactly what they're for. But I'm not sure it's something that this country can afford at the moment. We've got to balance the books, and it's all very well saying the wealthy have to pay more and workers have to pay more. But unless you're taking it from those that need it, whether that's the unemployed, the sick, whatever, it's very hard to justify doing it. And, I don't think those are the social decisions that I would want to take.
Yeah. Well, we've run out of the points from ChatGPT.
Wow. We have exhausted the internet.
Well, the high level points, at least. I'm sure there's plenty more we could have spoken about.
This.
How maybe just a few things for us to take away. What key things on the things on those stats that we've talked about would we like to see the biggest improvement on, not just for us but for our clients as well?
Well, I would like to see the availability, two things, the availability of risk capital. I'd like to see more risk capital available. That doesn't mean risky capital. It means capital that will be put at risk. So it doesn't need all the governments ticking and bouncing and checking that the money was well spent. It needs money to put the money out there and take a risk whether it gets the economic return expected. I'd like to see more of that. I'd also like to see government trying to change society's perception of success. It seems to me that we deride success in this country. And, we need to applaud it. We need to put them on a pedestal, say, well done, you've achieved. And then all the kids can say, I aspire to be you. Not everyone's going to be a professional footballer or an astronaut. So we shouldn't ask our kids to aspire to only be footballers and astronauts. We need to get them to aspire to do other things. And successful businessman is one. So I think we need to try and change that perception around success. It's very easy to say, well, you should have paid more tax. You've got people on minimum wage. A lot of businesses have people on minimum wage. It's not necessarily a problem. It depends on the role the people are doing. it's a valuable role and it's paid, according to the value it generates.
Mm.
But we need to be able to applaud success so that our young have aspirations and aspirations.
Mhm.
And
So more access to risk capital.
access to
That's
risk
the top one.
capital, better for society's perception of success.
Mhm.
It's very easy to say, let's just tax them more. Oh, they don't do enough things right. We need to change that.
Suppose on the access to risk capital, I mean, there's a lot of private equity out there, and we've seen them invest in some of our clients sometimes, albeit for a big chunk of the pie.
The UK private equity model is about majority ownership. European model is a bit more minority ownership. Why can't we have both in this country?
Mm.
Why can't we have a range of different options? Why does it always have to be ownership driven? Could we have a hybrid model? So there's lots of ingenuity, lots of options, and lots of financial engineering people could do, but it ultimately requires the risk appetite and the capital to be able to deploy it.
Mm. So
My own view is if we could create platforms and some sort of regulatory base around tokenizing it and disintermediating the providers, that be that private equity, private credit, the banks, etc. You've got a lower cost product because there's less people to feed in that system that might create a better answer. But it comes with risk because you haven't got the private equity expertise or private credit expertise or the bank's processes to sit and say, this is a good investment.
Mm. Yeah, brilliant. Well, I think there's an awful lot to chew on there. I'm not sure if we've concluded on whether Labour's doing a good or a bad job, but
That wasn't the purpose. They were elected to do a job,
yeah,
and they can only be judged by whether they've achieved that job.
absolutely. And I think ultimately no one can ever expect to be completely represented in the way they would like to be in the Commons. So whoever you vote for, even if you think they are the solution, they ultimately come in and do some things you weren't happy with, but do some things you were happy with. So there's the kind of, you never quite get the perfect answer.
Yeah, they were elected on a basis, and that basis will have included things that you don't like and do like. And, it's called a manifesto, but you can probably read a bit wider than the manifesto. But effectively, that's what you've got to see. There's got to be a direction to travel to implement that manifesto. Whether you as a voter like that or not, that is what democracy is about.
Yeah.
You accept the collective will of the people, majority of the people.
Mm.
And, we've gone a certain way. We've got 3.5 years to go. And if they can achieve what they said they were going to achieve, people will be delighted. If they don't achieve it, they'll probably not stay.
Do we think that Conservatives would have done things differently, like in a dramatic way? Many have said over the years that Conservatives are just right of centre, sorry, and the Labour's just left of centre. I think maybe that's changed a bit over time. But
Left and right's a hard thing to say. I think that you never know. You asked me to roll a dice and have a crystal ball. So what do I think? I don't think the Tories would have given in to the unions. I think the Tories would have held out, even in the face of third-party reports saying it should happen. They'd have held up much better. So the deficit would not be where it is. What else would they change? I don't think they'd have done some things like taxing farmers. But some of the things they might well have done. There's very little wriggle room here.
Mm.
I think that's we haven't seen the cutting of red tape. Certainly the clients I speak to and Acumen itself, we're not seeing the impact of cutting red tape at all. If anything, we're seeing a drive for more data to make more informed decisions. And that's red tape largely.
Mm.
So I'm not sure I would say that, governments don't tend to make massive changes. It's one of the big disappointments. If you go back through and see which governments in history or recent history have made such huge changes, right, that affected people's lives in a big way, not just an individual, but a large portion of the electorate. It's pretty hard to see. I mean, Tony Blair made Labour electable, and he brought in a huge wave of optimism, which was fantastic. Did he change the people? Well, that's a debatable point. I think Margaret Thatcher undoubtedly did, but we're looking at over a course of 45 years, 79 to 2025, we're talking 45, 46 years. We've got 2 people in the fray for that. That's shocking.
Yeah, it's pretty appalling.
And you're looking for people to change lives. Now, ideally for the better, but normally for the better, there's some people that are worse off, right? So you have to sort of say you might be one of the people worse off. So it's about whether they change lives in the direction of which they were elected to do it. So this Labour government is to be much more about trying to create equality of income, balance, take from the wealthy and give it to the poor, right? The Robin Hood sort of philosophy. And that's what they should be judged by. Raising public sector unionised workers' pay is making inroads into that. And they're talking about the public sector workers actually being better off than the private sector bearing the pain at the moment. Is that right? Is that wrong? That's a social question, and one that Labour were elected to make.
Yeah.
As long as they implement policies that achieve what they said they were going to do, we can't criticise it, whether we like it or not. It's not our job.
Sure. Brilliant. Thanks for joining us on this podcast about trying to take an objective look at the performance of our government. We'll see you next time, where we are talking about the rumours that have come out around the budget, which is coming this month, November 2025.